What's up, everyone? It's Scotty with Money Investing. So, Elon Musk and Bill Ackman kind of went back and forth on some tweets that I wanted to go over in this video. And it's quite crazy how much Elon Musk is advocating for the Federal Reserve to cut rates on Wednesday. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, private videos, lectures, all that stuff. Link's going to be down below if you're interested in joining. And I'm also going to be going over the US dollar swap lines, which have been opened up as of today, Monday, and we'll go over exactly how much which central bank borrowed in the previous financial crisis that we have seen from back in 2020. So once again, thank you so much for joining in. Link's going to be down below. Consider supporting the channel and of course getting access to all the other benefits as well. So this right here was what Bill Ackman tweeted 2 hours ago. I'm not going to read through the entire tweet. It was pretty long, but he pretty much says, and I quote, "The Federal Reserve should pause on Wednesday. We have had a number of major shocks to the system. 3 U.S. bank closures in a week, wiping out equity and bond holders, the demise of Credit Suisse, and the zeroing in of its junior bondholders, notably bondholders bearing the losses." So that's really what he mentioned, and Elon Musk responded to him saying, I'm going to remove myself a little bit here, Fed needs to drop the rate by at least 50 basis points on Wednesday. This actually came out 1 hour ago from Elon Musk. So pretty aggressive in rate cuts. Elon Musk definitely is, pretty much advocating for a substantial amount of rate cut. I agree with Bill. I think the right move here for the Federal Reserve is to pause because, if they all of a sudden start cutting rates, I mean, that's really going to be a big flip on policy. And you already know what Jerome Powell said during the testimony in front of the U.S. Senate and the Financial Services Committee, literally a day before Silicon Valley Bank collapsed. So it's I think a rate cut's going to be sending the wrong messages to the market. Market in general might benefit from rate cuts, no doubt. There's going to be quantitative easing. There's actually quantitative easing going on in the background already. So we are seeing a little bit of some injection in the economy with the money supply and US dollar swap line. So this right here is the amounts drawn from the Federal Reserve's US dollar swap lines by different banks. So you'll notice that Banco de Mexico pretty much borrowed close to $5 billion. This was all around 2020 during the pandemic. They were opened back up. Bank of England also borrowed close to $8, maybe $9-10 billion around that time. Bank of Japan borrowed over $60 billion around that time. European Central Bank borrowed over $60 billion around 2020. And then 2020, we got the Denmark's National Bank, a little over 2 billion. Bank of Korea, over 8 billion. Bank of Singapore, a little over 4 billion. Norges Bank, which I believe is going to be Norway, is 3 billion. And Swiss National Bank was a little bit over $9 billion. And these are all numbers of US dollars that they borrowed from the Federal Reserve to lend it out to their own banks. And this right here is going to be the couple of times that we have seen the central bank's liquidity swaps and how much liquidity has been injected into the system in terms of US dollars. Of course, 07, 08 is still pretty high. I think this number sits at $580 billion, eclipsing the number in 2020, which was just a little bit under $500 billion. And once again, this number is going to start to creep back up over here moving forward because, well, the US dollar opened its line on a more daily frequency basis for all the central banks around the world, and they're going to start tapping into it if basically there's more financial stress in the system, and of course for a lot of different economies and countries as well. So this is, they're already starting to inject a little bit of capital in the economy, in the world economy, and not to mention their own balance sheet as well has started to swell up a little bit. I mean, they've given up, most of the quantitative tightening that they did over the last 1 year. They've given it all back, not all of it back, nearly half of it back in just 1 week. So, it's already starting to show, how the Federal Reserve is going back on their word a little bit with quantitative easing. Now, this is a little bit of a different type of quantitative easing. They're not necessarily buying securities or not buying U.S. Treasuries or mortgage-backed securities, but instead lending them out using the discount window at the discount rate. So banks definitely do have an incentive to pay back the Fed as soon as possible. But at the same time, they're absolutely making a killing because they're putting up collateral for their U.S. Treasuries and mortgage-backed securities against that loan, and those market values have collapsed against the face value. So the Fed really is the one who's taking a bath here because they're the ones giving, the banks like a full free ride, giving them $1 on the dollar, and they're accepting 60, 70 cents on the dollar for the market value. And their plan would be to hold until maturity and then roll them over. So it is quite frustrating because, not everyone gets a free pass on every time you make a loss, but banks almost always seem to get away with it. And they're already starting to kind of inject a little bit of QE into the system. So I don't agree with Elon Musk on this. I think 50 basis points is absolutely going to wreck market expectations. It's going to be good for the short term because QE is going to be back, and it's going to be back with a very aggressive motive here. 50 basis points is no joke. Even if you drop rates by 25 basis points, even if you cut rates by 25 basis points on Wednesday, I think the market will see that as a huge positive, and we're going to rally pretty substantially in the short term. But that's just us kicking the can down the road. I think that's exactly what's going to happen is we're going to kick the can down the road. But I do agree with Bill here. I think the much better thing to do is a pause to assess where the situation goes, how's the liquidity crisis, how are the banks doing, and how inflation ends up over the next few months. And then we can slowly and steadily start to pull back and reel back on the interest rates moving forward. As we've already talked about, cutting rates immediately back down can potentially increase a spiral effect on inflation once again. So if you do immediately cut rates down 50 basis points, 75 or 100 basis points, it's possible that inflation once again gets out of control, something that we have already talked about from back in 1975 and of course 1980s as well. So history is the best guide for us. So bottom line is, let me know in the comment section down below, do you agree with Elon Musk or do you agree with Bill Ackman, or are you advocating for a higher rate hike, right? Are you advocating for interest rates to actually be increased in the meeting? I think the market's right now still expecting 25 basis points. Last time I checked, I think the Fed Funds Futures is still pricing in for a 25 basis point hike. You can take a look at that very quickly here. So let's go to the CME Fed Watch tool. So again, I think it is pricing in for a 25 basis points for Wednesday, March 22nd, and then pricing in huge cuts. There we go. 73% probability for a rate hike of 25 basis points, and expecting for us to stay there for the next few months, and then a couple cuts here, 50 basis points cut starting in July, and then consistent cuts all the way through July of next year as well. So let me know in the comment section down below. What do you think? Pause, cut, pause, or hike? Simple comment. Let us know down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.